Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BICYCLE Therapeutics PLC quarterly report. BICYCLE Therapeutics PLC offers a diverse range of businesses and services, including pharmaceutical development for underserved diseases, clinical trials for various treatments, such as plus zelenectide pevedotin, BTC, for high nectin-4 expressing tumors plus BT5528, F-ATWO, for ephrin type a receptor 2 expressing tumor plus beat 7480 for targeting nectin-4 and agonizing C137 preclinical trials for plus novel CNS targets plus novel neuromuscular targets plus radiopharmaceutical programs collaboration with biopharmaceutical companies, including plus Bayer Consumer Care AG plus Novartis Pharma AG plus Ionis Pharmaceuticals, Inc., plus Genentech, Inc. BICYCLE Therapeutics PLC's stock price crash. A year of turmoil. The past year has been a tumultuous one for BICYCLE Therapeutics PLC, NASDAQ, BCYC, with its stock price plummeting by over 62.64%. Several key factors have contributed to this decline, including a turbulent market environment, disappointing financial results, and strategic adjustments. A challenging market landscape, increased competition, and shifting healthcare dynamics have all taken their toll on the company's stock. Disappointing second quarter 2025 financial results, which fell short of analyst expectations, were a significant blow. Analyst downgrades and revised forecasts further exacerbated the decline, as did increased operating expenses and net losses. The company's decision to reduce its workforce by approximately 25% in August 2025 was intended to extend its financial runway, but may have been perceived as a sign of underlying financial pressure. Additionally, delays in clinical trial updates have contributed to investor uncertainty. While BICYCLE Therapeutics has reported promising phase 1/2 clinical results for certain drug candidates and strengthened its balance sheet, these positive developments have not been enough to offset the negative impact of the aforementioned news and market conditions. As a result, the company's stock price continues to struggle, leaving investors wondering what the future holds for this biotech firm. The primary drivers of revenue growth or decline can be categorized into several key areas. Regulatory approvals, commercialization, collaborations, and patent protection are essential for driving revenue growth in various industries. Industry-specific drivers include market acceptance, regulatory approvals, and competition in pharmaceuticals, biotechnology, and medical devices. Macroeconomic factors such as global economy volatility, trade restrictions, and inflation rates can negatively impact revenue growth. Tax-related drivers like changes in tax laws and disagreements with tax authorities can also lead to revenue decline. Additionally, compliance costs, security incidents, and social media practices can result in reputational damage and revenue decline. Overall, companies must navigate these complex factors to achieve revenue growth or mitigate potential declines. By understanding the key drivers of revenue growth and decline, businesses can develop strategies to stay competitive and adapt to changing market conditions. Net income for the company has seen a significant decline over the past year. Initially, it decreased from $3.4 million in 2024 to -$0.2 million in the first 9 months of 2025 due to intercompany service arrangements generating taxable income. However, this was followed by continued losses, with net income decreasing by $81.3 million from -$117.2 million to -$198.8 million over the past year. The main reasons for these changes include increasing uncertainty related to insurance coverage and reimbursement, as well as downward pressure on drug prices from government regulations and reforms. Additionally, the company's dependence on others for manufacturing has led to potential delays and limited access to manufacturers, further contributing to its losses. Profit margins have also decreased due to increased general and administrative expenses and a lack of revenue. The company is expected to remain in negative territory for the foreseeable future, with significant operating losses and increasing losses anticipated. And the company's financial performance indicates a significant milestone in its growth trajectory. One notable achievement is the generation of positive operating cash flow by the end of 2025, as stated on page 8 of the financial summary. This development signifies that the company has successfully managed to cover its operational expenses and generate excess funds, positioning it for future investments and expansion. The company's debt level and interest expenses have undergone significant changes in recent periods. In terms of debt level, the company has made substantial repayments, with a total decrease of $1.135 billion compared to the previous period. Additionally, the remaining liability for unpaid severance benefits decreased from $1.9 million to $0.4 million. However, interest expenses have been inconsistent. While there were instances where interest expenses increased, such as by £29 million in 2025 and by $11,000, other periods saw significant decreases, including a drop from $1,373 to $58 and a reduction of $1.5 million. The financial performance of key segments and regions. Our financial summary reveals that certain segments and regions have underperformed in recent times. Notably, the United States and the United Kingdom have seen significant declines in revenue. In the U.S., sales plummeted from $3,037 to $1,430, a staggering 53% drop. Similarly, the UK experienced a decline of 29%, with revenues falling from $14,152 to $9,993. These disappointing results highlight areas that require attention and improvement to get back on track. Management is expressing caution about the company's outlook due to various risks that may impact its business operations and profitability. Key concerns include uncertainty around government regulations and policies, potential for reduced reimbursement from Medicare and private payers, challenges in protecting intellectual property rights globally, difficulty attracting and retaining qualified personnel, risks related to tax reform, including increased complexity and burden management, is highlighting the need for vigilance and preparedness to mitigate these risks, which could impact the company's ability to advance its product candidates, maintain profitability, and protect shareholder value. The company has a history of paying dividends to its shareholders. According to the financial summary, this practice is in line with the company's policy, as stated on page 14, where it is mentioned that holders of ordinary shares are entitled to receive dividends when recommended by the board and declared by shareholders. This indicates that the company prioritizes returning value to its investors through dividend payments. Concerns about inventory buildup and supply chain disruption are prevalent. Several factors contribute to these concerns, including supply chain constraints caused by inflation, geopolitical conflicts, and global trade policy changes, disruptions due to U.S. government shutdowns, and reliance on third-party suppliers, production shortages resulting from raw material supply or manufacturing capability disruptions abroad, tariffs, trade restrictions, cyber attacks, and other threats that can impact supply chains, increased frequency and severity of supply chain attacks, and reliance on vulnerable third-party service providers. These risks highlight the potential for inventory buildup and supply chain disruption, emphasizing the need for proactive measures to mitigate these concerns. That concludes the financial summary for BICYCLE Therapeutics PLC. Feel free to comment below, and I will be happy to answer them when possible.